Arabica coffee prices edged back on Wednesday after soaring to record peaks just a day before. Dealers saw the market's supply issues as priced in for now. Arabica coffee prices rose to the highest on record on Tuesday as dealers fretted over Brazil's crop outlook. It came after one of the world's largest traders slashed its 2025 to 2026 forecast for the country's Arabica output. Coffee prices have soared around 80% this year, driven also by worries over the outlook in Vietnam. The spiking costs will benefit farmers with the crop this year, but that means a challenge for traders. They face crippling hedging costs on the exchanges and a scramble to receive the beans they pre-bought. Bad weather plays a major role in price fluctuations. Production problems linked to weather conditions in Brazil and Vietnam have seen global supplies lagging demand for 3 years. Experts are meanwhile predicting yet another year of lackluster coffee output. Brazil produces nearly half the world's Arabica. That's high-end beans used primarily in roast and ground blends. The country has experienced one of its worst droughts on record this year. Experts say the trees are producing too many leaves and too few of the flowers that turn into cherries. In Vietnam, which produces some 40% of the Robusta beans typically used to make instant coffee, a severe drought was followed by excess rains since October. Traders who buy beans from local suppliers typically take short positions in the futures market to hedge their physical market exposure. Fearing they might no longer get their physical coffee, many traders are closing out what have become loss-making short futures positions. Surging coffee prices are a problem for roasters. The boss of Nestlé, the world's biggest coffee firm, was ousted earlier this year after the board grew unhappy about weak sales and a loss of market share as consumers switched to cheaper brands. Roasters tend to buy coffee many months in advance, which means consumers will likely see the price spike in 6 to 12 months.